Hello, and this is day 2 of the annual conference, and I hope you found some interesting sessions already. I'm told we have over 1,900 delegates from, I think it's 57 countries now, which is really fantastic. For me yesterday, one of my highlights was hearing from Andrew Bailey, and I wish we'd had more time to grill him. He had some really interesting thoughts. But turning to today, so the corporate financial function is very complex and interconnected, and it changes very fast. In this environment, the Treasury has been given the lead role, often in ensuring the financial stamina of their organisations. However, such an enormous responsibility cannot be executed in isolation or in the dark. Today's Treasury and finance professionals are turning their attention to the financial evidence and intelligence that can be derived from their everyday operational data. Now, to derive the depth and breadth of financial intelligence, there's now a move towards more cross-functional collaboration within finance. I'm sure many of the people listening today will have experienced that. However, implementing such an infrastructure can be easier said than done, and we often hear about fragmented work streams, processes and technologies, often the last barriers to intelligent and proactive financial management. So in this session of 30 minutes, we're going to discuss what opportunities lie ahead for Treasury teams and how creating a connected and collaborative function can unlock ultimate financial value to the businesses by looking at Treasury and finance trends, insights from the ordinary, and what can operational data tell you. What is a Treasury data maturity curve, which I'm really interested to hear more about, and how do you create an intelligent, connected Treasury that involves people, processes, and technology. Now, before we get going, a bit of housekeeping. I'm sure for many of you, you'll know already, we do want questions. It makes it much more fun for Tom and myself. There's a toolbar at the right of your screen near where you'll see about and participate. Send questions in as and when, and we'll try and cover them as we go along. A reminder, the session is being recorded and should be available by the end of today. And as always, please get engaged on social media, join our active LinkedIn groups, follow us on Twitter at ACT Update, and tweet using the hashtag ACTAC21. A quick few introductions. My name is Naresh Agarwal, and after 30 years working Treasury, I now provide policy and technical support here at the ACT. I'm really delighted to welcome Tom Leach, who's the Director of Sales and Business Development for Treasury at Bottom Line Technologies. Tom, over to you.
Perfect, and thank you, Naresh, and thank you everyone for joining in today's session, where hopefully we'll cover some interesting points on looking at data, where that data resides, and how corporates can use it. Now, I'm a firm believer of not trying to sort of tell you should go and rip up your Treasury and you should go and find new systems. And what we're trying to do today is also guide on what sort of questions you can ask your banks to get the right level of data. What sort of activities can you use or do with current partners that you have to say to them, look, you know, we're struggling with, let's say, cash forecasting, or we're struggling with looking at bank fee analysis or interest rates. What is there that we can do with our existing structure? And as the rest of us said, where on the sort of data maturity level are you, and what sort of activities can you do to help move your businesses along? And obviously what we've seen, and everyone will be talking about it still, sort of COVID and the impact of it. For us, that's been a very positive, in some ways, sort of get everyone focused on changing Treasury and transformation. And I think there was a recent survey done by Tink, the API providers, that said 76% now of executives in the UK are looking at transformation in finance, and also specifically how open banking and PSD2 can help that. So we'll try and touch on all of these little points and saying where we are. Now, what I'm going to do is, obviously we have the agenda, I won't bore you too much. We're going to look at Treasury and finance, the trends. What we mean by this is collaboration, not just between systems, but also between different teams. We've had prime examples, actually one in the US with Avalon Healthcare. They've gone from working with 2 teams for their forecasting, now working with 17 teams around the world to get their forecasting up to scratch. Now, that was actually being just addressed once a week, and actually now they're up to 7 iterations throughout the day where they're sharing. So they've gone from a really sort of stagnant, let's just be sort of reactive approach to almost sort of panic stations, let's get a proactive approach come out the door. And that's changed from we need it now to moving forward to now they're moving down that maturity scale to what is a predictive environment. Obviously, this is all based on visibility and speed. and being able to pick up on insights from the ordinary. So what operational data can tell you. So is it telling us that, we'll mention later on, like who are the good payers, who are the bad payers, what impact does late payment have on us? And then sort of looking, as I said, the spectrum and trajectory of where do you fall on the data maturity. And then hopefully giving you some insights on what you can do, as I said, later on in the session. So what we're going to look at is some of the, what I call sort of new reality. So the new reality of the finance function being collaborative and converging with other technologies. What I mean by that is no longer can you really have a system sat standalone, trying to get all the data from one solution isn't the answer. What we need to look at is saying, right, do you have an ERP? If so, great. Which one? How many versions? How old is it? And also, what data or what format does the data reside in? We actually had a very good client of ours in Sweden who we thought perfect. They've got 12 ERPs, but we thought at the time all of them could feed off an XML format. And we thought this actually quite straightforward on the implementation approach. However, there was one ERP that could only receive a TXT file. And although that they've been open and saying XML is coming into play in 2023 with their business, we had to re-engineer all of the 11 ERPs that were on XML into the less mature TXT format. So again, it's important to sort of see what data do you have, but what format is the data across your group? Because when we're looking at sort of the new reality of saying that treasury and finance have to bring in data from different softwares and different systems, it's how do you use that data and how can it actually read? Because that is the sort of lowest common denominator. Although you may have Excel, and this is great, what you really want is the systems you have in your organization to be able to be powered by this. And then once you have that data, you can then start to do lots with it. And we'll touch on more what you can do with later on. Looking to sort of derive intelligence from this data, it is really key. And systems, although they say they have AI and machine learning, I'm a bit of a cynic of this, saying, yes, great, you may have a label that says you have machine learning and you have AI abilities in the system. For me, at the moment, where it all is being able to display data in a user-friendly environment for Treasury to tip up and understand it. Fundamentally, treasurers will always have a job because you're the ones who now have more free time, hopefully, with these systems to make strategic decisions. It's never really going to be a machine that says, right, we recommend this, or AI says, we recognize these seasonal variances. Yes, they will help, but it's down to the treasurer to look at the data and say, where do we go? And we're seeing this more and more, actually, when we come to RFP or when we go out to market to some of our customers. Often they'll actually, in the second or third interaction with us, bring in their data scientist or data engineer. And we didn't see this ever up until about 18 months ago, but now they're sort of really being stuck to the treasury and finance team saying, look, we have this FP&A tool in the background, or we have this SQL database where all of our transactions and information across the group resides. How do we plug your system into it, or what can we share with it to sort of see when we have this sort of huge soup of data, the bits we want to pull out of it. So the speed of being able to connect that through a UX or UI, the visibility, so UX is user experience and user interface. And then obviously once you have that visibility into sort of things like your balances, your transactions, who's paid late, who's not, you can then start saying, actually looking at my liquidity, knowing these people pay late, I need to start drawing down from a line of credit. Going further, what is the cost of drawdown on that line of credit? Could I have funded internally? So when you have all this data and in a system, hopefully you have existingly, not just on Excel, you should be able to make better decisions. Now, what we see here is 61% of corporates want to look to their banks for one sort of single point of real-time balances. We're seeing that more and more. Even to plug our competition, Kariba have just signed a deal with SocGen, they announced 2 days ago. And that is to provide a balance through the capital markets tool of Societe Generale. We've done the same with DNB Bank. We're seeing more and more of these banks come to the treasury world and say, actually, rather than us building it, is there a way of getting this user interface and experience and ease of implementation into our softwares to give our customers that single multi-bank point of view, as we see with PSD2 pushing banks down that route, and open banking saying you've got to share data. So banks don't want to lose out on that. So it's good that the corporates now are saying that they want one single point of view. And ultimately, that's going to lend itself to better decisions, as I said, with liquidity, looking at drawdowns, looking at payments, what advances can be made. Some of our clients in the US are now looking like payment cards, virtual cards, utilizing the networks outside of the banks. It's looking at also the ultimate end of it. It's like not simplicity and unification, but at least simplicity of understanding the data. Because if you can't get any sense either way from a provider or from a bank, you're going to really struggle to take advantage of ultimately what you can have within the data that you own. And that's the most important part. But when you speak to some of these banks or some of these providers, they say, well, it's a bit difficult to get that data out of our SQL database. It's not. They just don't really want to give it to you, because as soon as you have all that data, there's almost a risk of saying, you now have what we effectively controlled. So often ask for a upload of data or for a dump from the SQL database, because that will show when and where the power is, and you will have the ultimate power then to decide what you want to do with it.
So just to interrupt you there, Tom, on a couple of things. One is, what you're saying there is Treasury folk out there and finance folk generally should be pushing back a lot harder to the banks and their sort of technology providers about being able to access their data, because I know as an ex-treasurer myself, the banks would often say it's very hard, or somebody would say it's going to cost a lot of money and take a lot of time. Are you saying that we shouldn't really put up with that anymore?
Absolutely. I mean, if you look at like what the cost for an MT940 was to be sent via Swift by a bank, they used to probably charge £40–50 a month per account. We've seen now instances where same bank, same relationship managers now being charged nothing, because 2 years have passed and we see open banking, we see these trends change it. So it's good that these regulations have come about, because banks are now being put on the spot. But equally, Treasury or technology providers aren't immune to this as well. When we first had the, first cloud revolution, when we said, look, we're going to host the system as SaaS, software as a service, people were a bit sort of worried about whose data is it, where is it owned, or what resides in it. And I think as more and more people are now utilizing the cloud, we're now seeing actually that data is ours, or we have the rights to it. And so you should ask, saying, actually, I want a data dump, or I want it to be connected to our IT team or our data analytics, to go and say, we want to review this every day, or we want to view a dump every month to see where we are, because there's trends that you'll see in it that the system isn't configured for, such as if you're not using cash flow forecasting or you're not using working capital, you won't be able to see certain analysis around it. If you have an FP&A tool, you will.
And just one of the numbers I picked up on here was the 41%. That's respondents feel that banks' technology is fragmented. Why is this? And can you tell me what banks are trying to do to fix it, if they're doing anything? Or is it just all down to folks like you?
No, I'm not the answer to it in any way, and I'm probably the issue in most ways. But what we see with banks is, look, they are beasts that have been around for many, many years. And whenever someone tries to sell a technology to a bank, it's vastly expensive. I do feel sorry for banks when they have to go and buy software. It's hugely expensive. So they often don't change it. Also, if it's working, why try and change it? So they have legacy systems that often are built on different code. They aren't singing together. So what we're seeing at the moment is that a sort of switch or transition into banks reaching out to certain vendors and suppliers around the world, saying, right, we recognize we have a fragmented back end, but how can you make it a sort of unified front end? So we look at integrating with like loan engines, account engines, looking at sort of payment engines the banks have. With DMB especially, it was a bit of a workload up front at the beginning, but now we have an understanding of how to work with the bank's backends. The front end, the customer sees now is unified and universal. So it's partly down to the fact that there's so much legacy and they're so big, but we're not potentially helping it by saying that banks should go and change it or use us to fix it. It's more that we're seeing things change slowly in the right direction. So I think that number will reduce, and it has been reduced massively. I think when we first did it, it was sort of 60–70%. Have said the bank's backends are fragmented and siloed. Okay,
super. Thanks, Tom.
No worries, too. So I'm going to bring up my clicker, which will take a few seconds, then we'll go on to the next slide. Another thing, one of the sort of major areas, actually on the final point here, is fraud prevention, and we'll touch on it a bit later. some of the data we can look at and how that works, such as we've got a system in trial at the moment that will show if you're using a left hand or a right hand to use your mouse. So if you're left-handed and then suddenly someone on our computer tries to use a right-handed to make a payment, that will be stopped. So that's the kind of level we're looking at with some of the integrations with new softwares out there.
Wow.
So looking at these sort of 4 tasks here, so insights from the ordinary. So what I sort of said is looking at sort of collaborative and proactive risk management. So the risk management is a vast area to look at. And let's say specifically after that comment on payments is like fraud. So what risks are there from fraud and what data can be used to do it? One of the best exercises I'm sure a lot of companies are going through is when they go through like an ERP update or maintenance to the static data within it. One of the suggestions we've had in the past, and again, you should push for your providers out there, is to say, if we have access to the database, what security is there around anyone changing, for example, payment details or payee details or vendor remittance information? And what we've done in the past is actually say you should store, whilst there's maintenance on either one of the system, you should store that static data in both. So what I mean is, let's say you had a list of 1 to 100 vendors in your ERP. You should put that list of 1 to 100 vendors in the TMS at the same time. And when a payment is passed from the ERP to the TMS, if there's any discrepancy in data, that is one way of omitting any potential risk of fraud internally. Because then you can see that the data you thought was the master in the ERP has been edited against what is in the TMS, because you can lock it because no one's currently working on it. So those are the type of things you can do day one to sort of look at, saying, right, we've got data in the ERP, let's put it in the TMS and stop from any internal fraud. And that's not just during maintenance windows. That should also be done throughout the day or monthly updates and cross-check those vendor information monthly. So that's a sort of collaborative approach you can have between the ERP and TMS. You can also sort of look at more like the data coming from like a predictive forecasting. Again, predictive forecasting is a little a wide-reaching comment, as saying how can you predict on a forecast if you aren't a seasonal or you aren't a company that has steady streams? And that's kind of where you need to look at more useful data within it. What I mean by that is, as for example, like, who is a late payer, who is an early payer? If there are such things, there will be discounts. So you can see what are the risks within your forecast. So actually you can start predicting, great, we've had a huge sales invoice signed by client 3, but traditionally client 3 is the worst payer out of all of them. So although we've got the information coming in from the CRM, we may actually want to adjust that and say, rather than the 90-day term, as we predict them actually having a conversation and breaking it into 4 payments over 120 days, only after 40 days of discussing. So those are the type of things you want to pick up, and those will only be picked up from a collaborative approach between what's in the ERP and what the Treasury want to look at for their forecast. So it's looking at that sort of data to analyze, is anything at risk, especially nowadays where sales might have slowed, or you actually need that cash more frequently, is to say, what can I do with my cash and what's out there that's supposed to come in? Can I speed it up by offering discountings, or can I look at where else I need to draw down? And that sort of goes to the next point of saying, look at your debt management. So if you do have a shortfall, what's internally in your business? Now, you can only really do that if everyone's in the same Excel or same system, or that data is coming in at the right frequency. Because it's not just saying daily, my balance is what do I have? Again, that forecast should be done potentially at the company level. It could be done at the group level, and seeing where should that data come in. And if it's done only at the group level, maybe it's time to see, are there any vulnerabilities in that, or should you be looking at an account level or company level forecast? And we've seen a lot of our customers change from that, saying, look, we had too much exposure to FX whilst everything was going down at the company level. We were only really forecasting at the group level to start with. And we've now gone down to the company level to say, right, what are my FX exposures on my cash flow forecast? And then should I hedge? We've actually worked with a few companies to put in a hedging policy based on that breakdown from the group level forecast to the company level forecast. And again, looking at sort of lifestyle liquidity management, you're going to be much more in a better place if you have this data. Again, I keep saying has this data. Have the bank statements coming in from the bank on a regular basis. Have the information for your forecasting to base liquidity decisions off on a higher frequency. And when there are a higher frequency of forecasts available, also have some level of metrics of checking of why things have changed. That should be done in the system. If you have one, you should be able to say, right, is there an audit trail to why someone has suddenly changed it? We've had instances where someone's gone in and said, right, we predict in sales in our group alone. So we predict a contract of 500,000, the next week is 400,000, next week is 300,000, and then it's sort of left open. Then at 100,000, it's like, why has that changed? What was the reasoning behind it? Because you want to learn from these changes within your group to see, is it something we can address and stop the sort of leakage of funds, or is it something we can say you should have started originally at 100,000, knowing that this customer does this every time they bring it in?
One of the things I'm really quite interested around this sort of predictive, and I guess it's proactive. And I'm just sort of reflecting, Tom, on a session I had yesterday with La Roche, where they were looking at some of the changes they could make in the treasury function that actually flowed through to the rest of the business. And just listening to you talk now about predictive forecasting and being proactive, I guess one of the things we've learned from last year is that credit management of our customer suppliers can be quite volatile and changeable, and getting more insight around that data more frequently can actually help the underlying business that we're there to serve.
Absolutely, yeah. And it's actually interesting. So we've seen a number of businesses pop up recently that provide that level of sort of credit analysis on these sort of small businesses or even large businesses, not just by the big four, but by data provided by banks. And one of them is a company called Credit Benchmark, which we feel is a very sort of interesting one looking at the future. And they provide up-to-date data on all of your sort of suppliers, and saying what do they have, are they at risk, and that's been very useful for a number of customers looking at it over the past. You're right. So the predictive, you have some sort of forecasts that are highly predictable, such as loan repayments. It's an interest on amortized loan that's going out. And whilst there's others that are less easy, such as like when will a customer pay, it's important to address it. So just because it's not easy to forecast doesn't mean just think, oh, I can't really be bothered, or why should I? There's probably only realistically in your forecast 10% that are constant. The rest are all variable and will have some level of prediction on it. So you really should try and address that and sit down as a group and say, where do we need to look? What is continually off? Even it's amazing how much information you get just from a simple variance of analysing like 3 months of forecasts against what actualised. And that's why you should be looking also when, if you can, looking at the bank statement and actualising it each day, so reconciling it each day, saying what happened, were there any variances, were there any fees that we didn't expect? And we're trying to push more and more our customers onto an automated daily reconciliation process that starts by actually changing our way that customers use our system by saying, rather than go on the dashboard as your first port of call, your first sort of position should be look at the variance created between what the bank has said happened versus what the ERP happened. And then you go and investigate that first, find out what the discrepancy is, then you move through the system into your dashboard, more of your payments, all of the sort of treasury activity.
And I guess when I first started out 30 years ago, I'd have been using, well, Lotus 123 at the time to actually do this. And I guess part of what we're doing now is using technologies like yours to actually have it more robust and sort of more quick to sort of run and deploy. Exactly.
Yeah. I mean, the speed to things is essential. Actually, yeah, as I said, like we're pushing them to our sort of exhibition, where it's our stand. You'll see some questions to win some money. We pointed out, our deployment has gone from what traditionally was the same, like 9 months for a sort of fairly mid-project, down to about 12 weeks for visibility and connecting internal systems. That's more or less most of the work done. So speed is enormous, and I think a lot of the takeaways when someone goes about setting out a new system, or even when they're trying to revamp a solution to get more banks connected, they sort of underestimate some of the legwork to do at the beginning. So we always say, just go and speak to your banks, because your banks will say there's like a 2-month block when it comes to the end of the year to upgrade the system, and it loses traction on deployment. So another point is always have good relationships with your banks to ask what's new and what's coming to help with all this data.
Okay, super.
Perfect. We'll go on to the forgive me, my phone's charging, so it switches off halfway through. So trajectory, data, and maturity. So what we've done here is outline sort of 4 stages. So what we have at the beginning is no ownership of data or access. So we say you're dependent. So you're at the very beginning of all of this journey. So what's next after being dependent? It's like you have some level of integration with disparate data, and so you're more reactive. So this is when, for example, you have an invoice in the ERP, it comes across into email for approval, you have no workflow of approving it, it gets lost, and then a couple of days later you get an email coming through saying, why hasn't this been paid? Well, the data's there, you have been shown it, but you haven't been able to action upon it. So now you're being reactive to some of the suggestions that are coming through. And then the analytical side, which when you go through and you say have some short-term analysis, you have some ability to have a UX and UI, and then we go through predictive. Now, I've never really seen, and I still have a very few number of our customers that sit fully in the predictive side of this. Most have actually started their journey at the beginning of 2009, 2020, end of 2019 of we're dependent on a lot of things. It's fine, we get by. We're actually quite analytical. It's like, well, let's see how analytical you are. When we get into the reactive stage and the sort of scoping of the project, we see that when someone says analytical compared to where theoretical endpoint should be, is actually at sort of Stone Age level of this. And I think the biggest jump we're seeing is providing 100% visibility into your cash and accounts, and also connecting to internal systems. Whilst we used to shy away from saying, please only have one ERP in our heads, because it makes it easier to bring data in from one than 1,000, we're actually developed ways now where we can integrate a mass number of systems, which is no longer a nightmare for us. It's actually, let's go and give this to the customer the best possible chance to get all the banks and all the data internally into one software. So that's where probably most customers are right now, is interconnected to the solutions. And now what we're seeing is they're taking those steps into the analytical stage. I'm looking at like my forecasting, where should I be with it? What are we achieving with reconciliation? And a good indicator is your reconciliation of what is the percentage you can automate it. Because frankly, if you're sort of going through and it's like only automate 30% of reconciliations, it could be off the bat that 70% are unaccounted for anywhere in your business. And that's a huge portion of transactions going into your bank that aren't accounted for, that have no corresponding entries in the ERP. Or it could be actually, look, there's a new system through acquisition that means this. So it's actually looking, where does the data sort of gap sit? Because a lot of people say at the start of their journey, we have excellent data, we just don't know how to use it. The fact is, you may have the best data in the world and you don't know how to use it, but you have no way of utilizing it. What I mean is, you have no system or no clear path of where you want to end up. So we always say to a lot of people, it's like, what do you have right now and where do you think you are on the scale? And also, where do you want to end up? Because there might be a sort of realization halfway through, although you want to be the superstars of data and analytics, the data, the quality you may have might be missing lots. What I mean by that is, if you have, for example, you're not using XML, XO formats, you may have a unstructured, limited information on the bank statement. So although you might have a forecast coming in from the ERP, you might have the 9-digit invoice number on, let's say, number 60 of that character of 1,000. Fact is, the bank may stop at 59 and you've lost all that useful data you need. So that's when we sort of sit down with groups and say, right, your endpoint is what you want at X, where in reality you're probably halfway through you can actually achieve with your current structure. And that's fine. We shouldn't be pushing customers saying, go and tell your banks to give you something else, or you need this new upgrade from us that can do it. It should be, here's the realization of where you are with what you have, and leave it with the treasurer to say what they want to do. Because we often see that treasurers being scared into, I need to go and find this new tool that plugs into yours because your address is a 1% need. Well, how about the other 99% that you actually need to address that you can without any extra cost or any extra sort of injection of capital? So we're seeing most of our customers sit within analytical, and there's, yes, a desire to hit predictive. Sadly, we don't think everything is singing and dancing yet to get to that predictive level. I don't think it'll be there for a long time. What we will be having now is treasurers being burdened with more of a sort of data scientist hat, with hopefully more free time, more ability and more stress sort of focus of saying, we need you to look at this data to give us the insights, which is good. That's ideally what treasurers have been put on this planet for, is to work with their company to find out where they should be heading and what dangers or what risks there are out there.
So, Tom, part of what I'm taking away from this is, for Treasury folk out there, really understand what data you have, and not just that it's bank information, but probably at quite a granular level.
Exactly, yeah. You're exactly right. So, like, bank data is great, but for example, like, again, we have a client of ours who works in FX and remittance. They only have 3 bank relationships, but the difference between the 3 are vast. But they still manage to make it work. So what, for that example, is, let's say if someone pays from HSBC to their Barclays account, just for example, maybe the wrong way around or different banks entirely, but we use them. The data that comes from HSBC may not be reflected in the RBS account. They may just say, right, we don't know who paid this, we just know the amount. Whereas if someone paid from Lloyds to RBS, they may actually include the payee. So again, it's very different between all banks, and there's trying to be standardization of that. And we are hopeful of what's coming through with open banking and APIs, and seeing these banks say, right, we've actually got to turn more into a tech engine than we are money making machine. But yeah, I think talking to your banks will show a lot actually with what you can get, and it won't cost anything. Well, it shouldn't really cost anything more. It's just a request to see where the data is and what you have.
That's a good takeaway.
Of course, the banks might tell you different, and I'll probably be hounded by them behind the scenes at ACT, but we'll get there. We'll get there. I'm actually going to skip over the sort of path of truth. I think for the time being, the most important is, I think, sort of knowing the benefits of seeing where an interconnected treasury, and actually, is this possible? Trish, I know that you had a few experiences in your past working as consultants to say this is obviously sort of like a endpoint everyone aims for, but has it changed in the past, and is it going to get there?
And I must confess, as you say, for me, this looks really good. It's a great consulting slide as an end game for a FTSE 20 company. And I know when we did some preparation, we had some conversations about the type of companies you're seeing actually benefiting from something like this.
Yeah, you're absolutely right. Like, it used to be the FTSE 20 companies, and the ones that had unlimited resources and ability to go and find large companies to help them achieve this. And I think that's changed quite a lot, not just within the last 18 months. It's actually changed a lot in the last 5 or 6 years, where sort of smaller businesses, we predominantly work with companies between like 200 and 500 million pounds revenues. We're actually seeing companies down, I think the lowest we saw recently was a Dutch company, 100 million in revenue. And they came to us and say, right, we want to achieve this goal. How do we get there? We sat there for months figuring out what the sort of progress we're going to make into, let's say, looking at Treasury as is now. You have 50 banks. Let's go and get 5 house banks to do the majority of payment flows to prevent fraud controls and stick with all the security and risk mitigations there. We've then said, right, how many accounting softwares do you have? Are they the same version? Are they the same? They said no. So we've sort of drawn a huge path for what effectively is not a small business, but a mid-sized enterprise to say, at 100 million revenue, we can go through and connect to your banks, streamline the structure, improve your fraud controls and prevention of payments. We can then go and say, right, what other data do you need from the banks? How does that feed into the ERP? Where else can we go around, analytics around saying internal house banking? Can we do risk mitigation, or can we do FX hedging? All of this has been achieved for a small business. And actually, we're seeing more of them happen because they're almost more nimble. They're almost at the start of their treasury journey with one of these softwares. I don't feel sorry for anyone who has an incumbent software. You have the ability to do it as well, but sometimes it is actually easier to get it right. And because of everything that's happening with technology and cloud computing and all the data, it's almost that being at that sort of greenfield stage is a positive rather than what was perceived in the past as a negative. Using Excel is no bad thing, and relying upon it is not a bad thing. You're only going to sort of move into a more automated, not necessarily better. Everyone still uses Excel, even if they've got a TMS for some scenarios. You will move into a more automated environment where you have the ability to step back and look in and say what's going on.
That's great.
But I think, this used to be as only available to the top biggest companies that could go and get a big consultant to sit with you for a couple of years and figure it all out. Now you've got people trying to do it in smaller businesses like ours. You shouldn't really I feel we're looking at sort of the next part, you shouldn't really be put off by this data, or you shouldn't take it as, there's too much out there for me to analyze. One of the key takeaways we suggest when looking at this is try and break it into 4 parts of achieving what we call connected treasury. First and foremost, you will have a bank relationship because you're in treasury. That's number one. You'll have someone out there you can talk to. You may not have a system, you don't have a big group of people, you may have formalized processes, but you will have banks you can talk to. So we always suggest go and chat to your banks and see, right, we are, let's say, embarking on a upgrade of our treasury. What we mean by that is maybe a system, or we're looking at a cash management solution or a forecasting tool. We need to have this data. What can you provide? Is it just a simple M940? Or actually, do we need to know the credit and debit advices, so a 900 or 910? Or is there something else out there that working with it, we may have a business account or we may have corporate accounts. Can we do it through APIs? I think it's actually HSBC have just launched a new information saying you'll be able to look at guarantees and letters of credit through the API eventually. So look at your banking structure, how well them. Like, you shouldn't be left on your own saying, look, you just go onto the bank portal and you download a statement and that's it. There's better things out there. At least you have a conversation of where you might want to go. Because when you come to a system, the worst thing in my experience is someone says, I bought a TMS and I have not spoken to the banks. You always make me cry because I know the conversation is going to come up saying, we've got to pay for an M940, we need to reduce your costs on the TMS. So once you've spoken to the bank, the next logical thing is say, right, do I have a system? If so, what do I have and what do I want to do with it? Is there a way of improving it? You shouldn't be saying just because it's implemented and you've signed off on it, it's not necessarily you're using it correctly or fully to the advantage you should do. And again, it's not just treasury system. You should look at like a trading system. You should look at anything else internally. Does another arm of the business have a forecasting or an FPA tool, or do they have an analytical tool like a BI engine you can plug your data from the bank in just to give you those reports? And then going through looking at people, like people is hard. You're always told to do more with less, and not necessarily people is the answer. But we've seen a huge amount of collaboration occur, as I said, with the forecasting in the US with Avalon Healthcare, with other companies out there really working together now because of what's happened in the last 20 months or so. So look at your people, what do they struggle with on a daily basis? Is there any efficiency that another team is doing that you could do the same way? Like sharing files, is there a better system than Dropbox to use, or is there anything else? So looking through that and saying, right, where do we all want to head as a group? And then what processes do we have? Now, if you're addressing all four of these, you're going to have a fairly good idea of where you stand currently right now, and also where the areas and where the pitfalls are. And at least, one of the biggest sort of moments in life is always realizing who you are, what you are, where you want to go. Is what do you have and what the troubles are. That's a huge way forward from when you may have started this saying we don't know what we don't know. From that point, once you're aware of anything or any pitfalls with any data, you can start planning and say, rather than take a huge chunk of it in one go, let's take a small step to saying our biggest issue is forecast accuracy. We know we have data coming from 3 different ERPs, which only can integrate from 2 because a PDF is the third one. Or maybe let's get working on converting that PDF to a CSV, and then you can all bring it into Excel. So there's little steps you can do. And your providers of all systems out there shouldn't be so resistant or hesitant or charge you for it. They should act as sort of like almost like a sort of consultant or a sounding board for you. Because like last year, I probably spoken to about 300 treasurers around the world at different companies. Not all have taken this system, of course, but it's important to act and listen and see where they want to go. So we should be able to help. That's my feeling to answer.
That's brilliant. And if there was one or two things, Tom, you think people listening to today could do tomorrow, what would you say out of everything we've heard today?
I think, honestly, speaking to the banks is a very key piece, because no matter who we talk to, someone's always like, we haven't got full visibility. And I'm not saying that every account needs to be looked into, but you might be able to rationalize or save some money through the banking relationships you have. And that's always a good start. The smaller in some ways, the easier it is to manage. And banks will be telling you now more technical advances they're making. I've seen a huge change in conversations, even in the last 6 months, what treasurers are having with their bankers. So I'd say speak to the banks. And then also the most important is, I think, then the people. Look at what others are struggling with, and you might be able to help with, and you might be able to learn from them. But don't try and feel like you need to rip up an RFP and go out to market and find a new system. The system you have probably is the right one because you made it the right choice in the first place, hopefully. But work with them once you know what your people want and what the banks can do. And then you can go from there.
So 2 things that I've taken away personally. One is, as you say, the banks are going through enormous change in their sort of adoption of technology. And if the last time you had a conversation was more than 6 months ago, it's probably worth having another one and understanding where they are today. And I think the other thing that I've taken away is there is a huge amount of information already in your organization without needing to implement an XML or an API, because again, one of the things I've taken away is it's great having more data, but if you can't actually do anything with it, it's a bit of a waste of time and energy that you've invested.
Yeah, and I think you'll get lost very quickly down a rabbit hole thinking this is the best thing if you try and develop all of it. So I think it's spot on there, Rash, with your summary. Okay. So thank you.
Super. We're sort of coming to an end. And first of all, I want to say thank you very much, Tom. I found that really, really interesting and engaging. And what I like is we're not talking about go away and necessarily having to spend lots and lots of money. That may come later, but actually there's quite a lot of you can do with your own infrastructure and own estate. I quite like, it goes back to part of my consulting background, that data maturity trajectory, about working out where you are and where you want to get to. And as you say, it's not always about wanting to get to being predictive, but at least being more proactive and being more analytical. And again, as I said earlier, listening to the conversation I had with one of the Treasury folk at La Roche yesterday, it was about these benefits don't just affect Treasury, but can actually have repercussions and benefits across the entire organization. So thank you very much, Tom. I'm sorry I didn't get to answer any of the questions today, but just a reminder, you can watch this session again. It'll be available at the end of today and for 30 days, not minutes, later. Please continue with the discussion zone. Do join the exhibition stand. As Tom said, he gave you one of the answers to the 3 questions. I'm not going to tell the other 2 answers because I want to be the one who wins the £100 Amazon voucher. There are other resources on the stand, including some project management stuff as well, which I looked at yesterday and thought was really helpful, and it's free. So, you know, don't ignore that. Thank you again. Do fill in the survey about this session. It's always really helpful hearing what you thought. Thanks again, Tom, and for Bottom Line Technologies. Enjoy the rest of the conference. Thank you, everyone.
Thank you, everyone.